Hi guys, welcome back. Today we'll be taking a look at the Hang Seng Index as well as some of the Hong Kong stocks. Before we begin, remember take a second to give the video a like and subscribe as you really help our channel. Without further ado, let's first start off with the Hang Seng Index of HSI. So we didn't really had a very good week, although we closed above the 61.8% at 2010.60. So if we were to pull back down further, you can see that this rate conversion line is currently acting as a pretty good support, and it coincides with this 50% Fibonacci support at 2660. So I do expect this 2680 to hold, and if we start to break down, then unfortunately we're looking towards this 2311 and even potentially breaking this 20,000 to retest 19878. Looking at its resistance on the way up, we are looking towards this blue conversion line at 21420. So if we manage to cross this 21420, then it's likely for us to hit back to this high to test this 22142. And if we actually manage to go back above 22142, then it's likely for us to retest back this 22447. Let's move on to the Hang Seng Tech Index. So as the Hang Seng Tech Index is pretty well more supported, you can see that from its recent low of 3755 to a recent high of 4903, it seems like it was supported at 61.8% at 4465 compared to the Hang Seng Index, which was supported at the 50% Fibonacci supports. So if this were to 4465 were to hold, then it's likely for us to not test this rate conversion line at 4379. If we were to break down, then 4329 and 4194 will act as a support for the Hang Seng Tech Index. Do bear in mind that we are currently approaching the clouds, so you can see that on this particular day, the cloud acted as a very good support, and then we started to bounce back up above. That said, there's this blue conversion line in the way, and that is currently at around 4686. So this 4686 will be acting as a strong resistance for the Hang Seng Tech Index, and if we were to break out, then perhaps we can retest this high of 4903 once again. Let's take a look at Tencent. So Tencent 0700. As you can see, it didn't really had a very good week. We hit a low of 361.8 and a recent high of 406.8. We actually broke down this baseline at around 368. So if we start to break down further, then unfortunately it won't look too good. We may start breaking down below the clouds and perhaps heading towards 356 or even 344 for Tencent. On the resistance on the way up, the critical resistance to watch will be this blue conversion line at 384, coincides with this 50%. And if we want to be bullish, we need to cross this 390 psychological resistance before retesting 397 and even 406 as a possibility. Let's move on to Alibaba. So 9988, as you can see, we also managed to close above the 61.8% at 102.3. We closed around 104. So if we are able to punch up above this blue conversion line at 106.2, then it's likely for us to retest back 116.3, which is a good sign. If we can break above 116.3, then 121 and 135 may be within reach. That said, as you can see, this rate conversion line at around $98, just below this $100 psychological support, is acting as a very good support here. You can see that we was tested and we bounced back up the very next day. And at the same time, there is also cloud support here. So do bear in mind that if 98 were to break down, then things will start to turn ugly, perhaps looking at 93.7 and even 88.3. If all hell break loose, then it's likely for us to retest back at 79.7 and even trying to close this gap between around $80 to $88. Let's move on to Meituan. So Meituan seems to be consolidating sideways for a while after its recent good run. You can see that it hit the high of 212.7 and it started to go back down. But that said, we actually closed the week above this 78.6% at 194.1. We closed just below the $200 psychological support level, so that is a good sign. For now, you can see that this 61.8% at 180.5 was not really broken. In fact, it was tested and it hit a low of 183.0. So for the supports to watch out, if in the event that 180 were to break down, we're looking towards 170 and also 161 as potential supports for Meituan. On the way up, if we can clear this 212 and even this 211.6 recent high, then we're likely heading towards 242.4. At the same time, this rate conversion line is also at 182, so that is acting as a very good support for Meituan. Let's move on to NetEase. So NetEase, unfortunately, it seems to have lost its momentum. You can see that it had a very bearish looking Friday closing, and even just yesterday, we also lost some ground with a heavy volume sell down. Unfortunately, this rate baseline here at 154 has really turned into resistance, and we actually start to break back down. So as a recent low of 133 and recent high of 173, you can see that 38.2% at 148.5 is currently at our support level. If we start breaking down, we're looking at 142.7, where we can actually see more cloud support here, or even perhaps even retesting the low of 133.3. If you were to break out of this 164.5 and even retesting 173.0, then it's likely for us to go to retest the 188.9 after breaking through the $180 psychological resistance. Let's move on to NIO or 9866. So as you can see, NIO, it had a very big drop, even dropping below this rate baseline on this particular day, but yet it still recovered pretty well, closing above the 78.6% and 152.4. So if we can break out above 166.5, then we're likely to be looking towards 175.6 or even retesting the high of 196.0. That said, if we were to start breaking down, then 141.4 and 133.7 will be a good support as well. However, that said, this 125.9 shouldn't break down at around 38.2%. If we start breaking down, then things will start to turn ugly for NIO. Let's move on to next particular stock, which is JD. JD.com 9618. So 9618 is pretty impressive. You can see that it closed near the peak at 262.2. So we are looking towards perhaps a new recent high, or even testing 265.4 next week, and even perhaps even breaking up above this 286.0 high resistance. As you can see on the way up, the cloud is acting as a very good support level, and even we were holding onto this blue conversion line pretty well. And that's it. The baseline was not tested at all. And if we were to really test it next week, we're looking at supports at 246, 234, and even 225 as a very good support for JD.com. So hopefully we can continue this momentum next week for JD. Let's move on to Baidu or 9888. So Baidu, as you can see, it closed above this 61.8%, but this 78.6% and 142.7 would still be a resistance for it. If we manage to cross above it, then we're looking towards this 153.2, and even possibly testing 165.6 of its recent high. That said, this blue conversion line at 141.5 is also acting as a very strong resistance today, and we did not actually close above it or even go above it for the day high. If we will start breaking down, then we're looking towards 134.5 and even 128.7, which coincides with this rate baseline as well. Let's move on to AIA. So AIA closed the week with very much like a bullish engulfing candle, so it looks pretty healthy for now. We actually closed this above 61.8% at $79. So if we will start breaking out, then we can perhaps test 81 or even returning back to 83.55 and even going back above 86.55 to test this 78.6% on its longer Fibonacci resistance level. That said, there is also this resistance to watch at this blue conversion line at $80. Just above this $80 psychological support. So if we were to break above this, then we can actually start to turn bullish. But that said, this baseline here cannot break down at around 77.58. If we will start breaking down, then perhaps we may be looking towards this 38.2% support at 76.15 or even looking towards this 74.40 for AIA or 1299. Let's move on to PingAn. So PingAn looks pretty impressive after it consolidated sideways for a while, and we had a very nice looking green candle here on this particular day. Unfortunately, we couldn't test this, we couldn't break above this 50%, 51.75. We booked it intraday, but actually closed below it. So the next resistance to watch will be 53.15, 55.15, and even 57.70 for PingAn insurance. That said, you can see that this is a cloud resistance, and we are currently being rejected off this particular cloud resistance here. So do expect the stock to struggle for a while. It may consolidate sideways or even continue to drift further down if there's no external power to punch through the clouds. Looking at the supports level on the way down, we're looking at 50.65, 49.65, and 48.90. It's pretty tight ranging, while the blue conversion line and the red baseline is currently at 48.90. Coincides with this 50% at 50% Fibonacci support levels. Let's move on to the last particular stock of Xiaomi Corporation. So Xiaomi, once again, it seems like it's drifting sideways, but very similar to PingAn, it's actually consolidating because of its cloud resistance here. You can see that we are rejected off here, and once again, we are going as close as to the cloud as possible. We failed to clear this 50% 1288. We hit a high of 1290 and we started to pull back down. So the last support is essentially this 1130 here, 38.2%. You can see that just today we hit the low of around 1126. So 30.2% is still holding pretty well. I do hope this 1130 do hold, and even the $11 psychological support will do hold. If we start testing this 1092 or 1092, then things may start to turn ugly and we may go back to this low of 1030 once again. So if we can actually break above 1190 and even go back above 1234 and 1290, that would be a good sign for Xiaomi Corporation. So overall, this Hang Seng Index, it seems to be taking a break for now. For now, it's still looking pretty okay with a pattern of a higher low and higher highs forming, and hopefully this momentum can continue next week. And hopefully there is no more selling pressure from the Hang Seng Index as well as its respective Chinese stocks. So if there's any changes, I'll give you guys an update. Thanks for stopping by. Till we meet again, appreciate the manipulation.